Hello, I'm Courtney Fingar, and welcome to this fDi broadcast. Each year we announce the greenfield investment figures captured by our data service fDi Markets, and our report recapping the previous year's fDi performance, called the fDi Report, has become essential reading for those involved in the foreign investment industry. We're proud to launch now the 2015 version of the report. This time last year, when we released our recap of 2013's fDi figures, we had some good news to share. There were strong signs that the fDi market was rebounding from the doldrums of the previous few years, and we recorded an 11% increase in capital expenditure on greenfield projects. But unfortunately, it seems the tough times are back. The jobs of investment promoters will not be getting easier anytime soon. Our latest figures reveal that 2014 was a very challenging year for fDi. Early signs of a sustained recovery in fDi came to an end, and greenfield investment grew by a paltry 1% in 2014. fDi remains far below the pre-financial crisis peak, as the economic slowdown in major fDi hosts, most notably Russia and Brazil, led to a sharp decline in global fDi greenfield last year. There were a few bright spots. Among the faster-growing economic regions, such as Africa, there was growth in greenfield fDi in 2014. And perhaps contrarily to what might be expected, Egypt attracted a raft of mega investment projects as the investment environment and economic prospects in this key Mideast market improved. fDi tends to be primarily market-driven, and so for the most part, economies which achieve strong economic growth also attracted growing volumes of fDi. We see this not only in Africa, but also in places such as India. One of the most striking trends of 2014 was the changing sources of fDi. For the first time ever, China became the largest greenfield investor in the United States, driven mainly by investments in real estate and the chemical sector. We also saw in 2014 a strong rebound in fDi from the Gulf, which historically has been one of the leading investors overseas. Outbound fDi from the Gulf and from China is behind the major growth in real estate fDi that we saw in 2014, with real estate once again becoming the largest sector for greenfield investment globally. Of the manufacturing sectors, the biggest story in 2014 was the resurgence of the automotive sector, with a more than 70% increase in capital investment. In services, financial services recovered strongly in 2014, with a 12% growth in fDi project numbers. We are meanwhile bullish on the prospects for data centers investment and have included a special section in the report on this trend. The data center sector has seen solid year-on-year growth over the past 5 years, and we expect continued strong growth in this investment area with new sources, in particular China, emerging as major overseas investors for data centers. But overall, the picture will remain cloudy for fDi flows into 2015. The major economies of Brazil and Russia look set to contract this year. Economic growth in the EU will continue to be lackluster, and China's economic growth rate continues to fall. The huge fall in oil prices will impact negatively in oil-producing countries for their fDi flows. On the upside, the fall in oil prices and growth of consumer demand in the U.S. will be a boon to manufacturing and other sectors of the U.S. economy, providing a boost to GDP growth in that country but also globally. In addition, India and fast-growing economies in Asia, Africa, and the Middle East are among the locations to watch in 2015 for a growth in fDi. You can read about all of these trends and insights in more detail in the fDi Report 2015, which you can download here on fdiintelligence.com.